All right, welcome into Market Day Report. I am Scott Shellady, otherwise known as the Cow Guy. Thank you very much for tuning us in. If that's just what you're doing now, if you've been with us all day, that's even better, right? We're going to see what we can do to make you stay. But I don't know, we've had some okay markets here, but they've been kind of quiet after the open. Mr. Oppold handed me the baton. May corn, it's down 3/4 of a cent, 3 ticks. 4.30 3/4 is last. We've had, not even a 4-cent range, folks, so we can't get too excited. We're at the smack dab middle of it, right? So we're not doing too much, and we haven't done very much after we opened today. If we want to go out to the not to the D's, new crop, penny and 3/4 lower out there to 4.67 2 cents off the lows, 2.5 cents off the highs. That'll give you an idea about where we've sat, and that's about where we've been for, I don't know, I'm going to say the better part of an hour and a half, 2 hours now. Let's go to the soybeans and see what we've got going on there. 12.25 cents lower. And that May contract to 11.46. That's just a half cent off the lows. And about what? I call that 17 cents away from the highs. Does that give you an idea about where we sit there? This is getting weaker by the second. Novi new crop now down 9 cents to 11.58 penny and a quarter off the low. And that's about what? 13 3/4 cents off the high. So that one also is trading weak in that range. Let's take a look at the wheat in Chicago, the Chicago wheat market. Well, we're off between 1.25 and 2 3/4 cents across the board there. May wheat in Chicago, that's at 5.50 that's only about 6.5 cents off the high of the day. We're still down a penny and a quarter, but we're well off the lows by about what we call that 8 cents. So there you go. That's what's going on in the Chicago wheat market. If you go out to the D's, 2 3/4 cents lower out there to 604.5. How about hard red in Kansas City? From Chicago to Kansas City we go. This has got a little bit of a better screen for it. We're up here 3 3/4 cents in that May to 5.87 3/4. 3 3/4 cents off the high of the day. That's good, right? And we're well off the lows by, I'm going to call that about what, 9 cents. So there you go. That's May hard red wheat in Kansas City. The D's, that's up 2.5 cents to 6.13 1/4. That's 4 3/4 cents away from the high of the day out there. Let's go to spring wheat in Minneapolis. 5 1/4 cents higher in that May contract. 6.42 1/4 is last. And that's 7 1/4 cents off the low of the day. And we've got about what, 9 cents from the high. So we can call that pretty much the middle of the range. D spring wheat in Minneapolis, that's up 5.5 cents to 6.76. And finally, turn your head and hold your nose. This one stinks. 273 points lower in that May cotton contract. 80.20s last. But the good news is we're 70 points off the low of the day because it had been worse. You go out to the D's, 195 points lower there to 78.62. And that too is about 48 points off of the low of the day. And that brings us to our next guest analyst, Mr. Tommy Grisafi in the studio today. He's with a lot of different outfits, but we'll say Advance for the first one. Any thoughts on what those prices mean to you today?
Well, the fabric of our lives isn't doing so well, and we've had chances. I mean, we had a nice rally in cotton that faltered. We had a nice spike in corn during the crop report that faltered. But I think the bid and ask between reality and perception's a little wide in the ag community. And when you look at interest rates as high as they are, I don't know if folks realize it, but I'll tell you, interest rates are on the high of the year. So all this jibber jabber about all these rate cuts, not only did it not happen, the real market actually raised rates. I don't know if our viewers and listeners realize that you don't need to wait for the Fed for the rates to change. We trade those every day at the Board of Trade and other exchanges via financial instruments. And so the bond market had a horrible day yesterday, meaning futures went down, rates went up. Bad day. You all are watching the price of corn be down too. That's not the problem. The price is the amount of money that it takes to do business these days, whether it comes to labor, interest costs, machinery costs. I did a special a few minutes ago about land costs, and we're starting to see no sales in the state of Iowa, that it didn't meet the minimum reserve that the seller, you'll see these record, land traded this. What you don't see is how quiet someone says, I want $15,000 for my land, and no one wants to pay that. So things are very much changing in the ag community, and I'm happy to report, well, you were gone. I didn't break anything. Thank you for letting me sit in this chair.
Well, you're very welcome, and you did a great job, they say. But to your point about interest rates, and you're right, you look at the 10-year yield that we've got, Eurodollar instruments that are short-term interest rates, they give us a much more a better view of a day-to-day interest rate. But a lot of the things that we like mortgages and operating loans are priced off that 10-year yield. And it wasn't too long ago we were at 375. Now we're almost adding another 100 basis points to that. We're on 465 today. And that's going to be something that could be reflected in anybody that's rolling over an operational loan or anybody that's going to go for a mortgage, because they set mortgages off that 10-year rate too. That's just, as we've seen these rates get higher, as we keep talking about rate cuts out there in the real world, it's almost like people are just ignoring the fact that if you're talking about a rate cut right now, you're banking on this economy getting bad quickly. And that's what you're really saying, because there's no reason to have rates be lowered right now. We've got 10 seconds to you.
Correct. Yeah, VC capital's coming out of ag. I'll end it with that. Money's looking for a better place. They could just give it to the government so we can go fund another war. Back to you, my friend.
There you go. That's a whole nother show. All right, stay right there, Tommy. We're going to go away. We're going to pay some bills, and we're going to come back and talk with Tommy Grisafi, Advanced Trading, down here in Nashville, right after this. All right, welcome back. Let's talk about some meats here, and then we'll get back to our guest analyst, Mr. Grisafi. Live cattle, I brought that one up for us to see what that looks like. We've clicked on that live cattle board, and it shows us we're a little bit better here across the board. Not bad, right? We'll look at a June board up $1.75 to 175.57, and that's, I don't know, it's not too far off the high of the day by, I'm going to call that 22 cents maybe. All right, that's not bad. Let's take a look at feeders. They were also higher today, and they've actually added a little bit to them here. So let's take a look at the May. It's up $3.20. 241.20's last 15 cents off the high of the day. And folks, we're working on about a $4, maybe $4.50 range. So that's legit. We'll go out to the Oct. That's up $2.27 to 253.95, just to give you an idea about how that defers and those curves look. Then finally, lean hogs. Well, it doesn't know what it wants to do. That May board's down one tick to 94.30. And we got a 25-cent rally in the June to 102.70, well off the highs of the day there. Not doing very much here. I'm going to say, besides that May, steady a little bit better across the board, but this is decidedly quiet. All right, Tommy, anything you want to get off your chest when it comes to the...
We've processed the bird flu news. We've had the headlines. We've had the limit down days. The fundamentals of the cattle are bullish. They're probably becoming more bullish in a way. One thing that could hurt the cattle market would be a stock market crash. We're not seeing that. The stock market's having a normal 10% correction. If we did go into an area where we had a flush out, or one day we come on your show, it's very possible that you say Dow's down 2,500. That would change the a little demand structure in the cattle. We'll see how much the American, not just the American consumer, but any consumer, how much can they tolerate? Because to get people to continue to produce high quality pork and beef and chicken, turkey, whatnot, it costs a lot of money to do it. It goes back to the same thing. I feel like I'm preaching, but the interest rate, that is going to come back to haunt us. Advisors said, don't worry, rates are going to come down. Not only are they not going down, they're going up. That's going to be a problem for the livestock sector.
Yeah, there's a lot of the pundits out there that got this one wrong. And again, like we said in the last segment, I mean, two things can be true at one time, and that could be folks like you and I that might think that the stock market is a little bit overinflated because it ran up on the fact that we might get all these interest rate cuts, right? I think it's overinflated, but at the same time, all those pundits out there think that we're going to they still keep banging on about getting more of these 2 or 3, maybe 4 cuts this year. Two things can be right. You could have something happen, like you just said, a big correction in that stock market, so stocks come way back down to earth, and at the same time, that will give the government the leeway to go, hey, time to cut rates. So both of us can get right at the same time. We'll see. That's
possible.
Yeah, there
it's
you go.
Possible. What's the chances?
If you and I, not much. All right. Thank you very much, Tommy. Tommy Grisafi, thanks for sticking in all week, by the way. It was great of you to do that.
Thank
Really
you.
appreciate it. I'll hand it back over to
job.
Suzanne. Yeah.
It was great to have Grisafi in-house for
It was all right.
a whole week.
It was all right. I'm ready
awesome.
for
It was
some
great.
cow guy this afternoon.